Hi guys, in this video we'll be starting with the chapter number 6, breakouts, stops and retracements of CMT level 1. Before watching this video, you can check out the previous chapters as well, and I've linked the playlist in the description box below. So this chapter speaks about the breakouts, stops and retracements. Breakouts, breakdowns. When a stock goes into a consolidation phase and it breaks out, it's a perfect place to enter, right? So we are going to see how to trade breakouts. What are stops? When I say stops, I'm talking about stop losses, and how does a particular stock retrace as well. All right. So these are the learning objectives in this chapter. First, we'll be able to describe and identify breakouts. What exactly are breakouts? And having a breakout is the first thing. But we need to also confirm the breakout. We can't just enter into a trade as soon as we see that it broke out. We need to confirm that the breakout is not a false breakout. So the second thing which we'll be learning is methods for confirming and filtering breakouts. So filtering breakouts, this is going to basically increase the accuracy of our trades, right? Explain the purpose of entry and exit stops. So what is entry stops? We are also talking about limit orders over here. For example, if the market price currently is 139, I want to buy the stock as soon as it reaches 138, or let's say as soon as it reaches 140. So that is a stop, that at this particular price you want to enter, not anything less, not anything more. And why are we going to use that? Describe the methods. So how do you exactly come into a conclusion that this is where you want to place your entry stop or exit stop? That is something which we'll be seeing. And describe retracement, pullbacks and throwbacks. We'll see that. Okay, firstly let's see what are breakouts exactly. So if my stock is in this zone for a considerable amount of time and suddenly it breaks out and goes up, so this is where my stock broke out. So initially it was in a consolidation zone, it's in a channel, and suddenly it breaks out of that channel. This is what is known as a breakout, and a breakout can be in any form. This is a channel breakout which I just showed you. Now let's say a stock is having a resistance level over here, and it tested this resistance level so many times. Finally it breaks out and goes up. This is again my breakout of the stock. Alright, moving on. We can have a W pattern breakout. So it can be in different ways. That is what is my breakout. Now what do you understand by breakdown? So when I'm talking about breakdown, it is the same thing, but the breakout happens on the downside, right? So this is a case of short selling. So when the breakout happens on the downside, we say that it is a breakdown instead of a breakout. So breakout is usually upside and breakdown is usually downside. So that is the difference between breakout and breakdown. Alright. Okay. Moving on, how to confirm a breakout. So first thing is breakout. Now I also need to know how do I have to confirm the breakout. Before that, let's just quickly see some practical examples of breakouts so you will be able to understand better. Let me take a proper stock. Okay, let me just take Chola Finance. So this is one of my favorite stocks. I absolutely love this stock. Let me go on a daily chart here. Okay. Where is an example? Okay, now look at this. If you see this zone over here, if you can see that the price is resisting this place over and over again, right? The price went up, came down, went up, came down, went up, came down. So the price was resisting this zone over and over again, right? So the moment the price came down again, went up, and this time it broke this and went further up. You can see how the stock price went up. It broke out near 592 and it went till 664. That is like more, that is like nearly about 100 rupees. So that is one breakout, right? So I hope you understood the concept. We will also look into the details of confirming a breakout and everything, but for now just try to understand what a breakout is. It broke out of this resistance zone. So that's my first example. All right, then okay, again over here, if you see this, okay, the price was resisting this zone over and over again. It wasn't able to go up this zone. Finally it broke out of the zone, and then look at the price how it zoomed up. So that is another example of a breakout. All right, so breakouts can be any way possible. So if you look at this is a trend line breakout which we are seeing, trend line breakdown. So don't get confused, whenever I say breakdown it is just a downside move, and whenever I say a breakout it's an upside move. So look at this trend line over here. Okay, this is my trend line, and okay, let me just make it like this. So if you see this trend line has been respected over and over again. The price came down, took support at the trend line, went up, took support at the trend line, went up, took support at the trend line, went up. Here in this zone the price broke the trend line, and after breaking the trend line it went this low. So that is a trend line breakdown, right? So that is how we understand whether a stock is breaking out or whatever, breakout and breakdown. This is how you are going to identify. And when we talk about our, just a second, yeah, when we talk about our flag patterns and different kind of patterns, even those patterns also are being traded on the basis of the breakouts and breakdowns only, right? So let me go to some other stock. Let's go to Reliance, which is everybody's favorite out of its data. So now look at this stock. All right, let me look for a perfect example to explain. Okay, again over here, if you see this trend line, sorry, where's the trend line? If you see this trend line over here, the price touched over here, bounced back up, touched over here, bounced back up, touched over here, bounced back up. So that is a perfect support. Here, the moment it broke it, the price went this down. So that is how we are going to trade breakouts. All right, and now just don't go into the charts and don't start trading the breakouts. We are also going to learn about the methods of how to confirm a breakout. That's what we're going to see now. So that can be tested in your exam, and you should actually use it in your trading as well. Alright, so there are various methods using which you can confirm a breakout. The first thing is to let the breakout happen. Alright, so the second thing is a close filter. So you need to wait for the candle closing before you enter into a breakout. So whenever you want to trade a breakout or a breakdown, you need to wait for the candle to close. Do not look at the wicks. Do not look at the high or low of the candle and take an entry. You need the candle to close, to complete, to end, to close below the support level or above the resistance level based on whatever you are trading. So you need the candle to give a proper closing. So that is my first thing. Alright, so my first filter is the close filter, wherein I'm looking for the candle to close above my zone. Alright, for example, if this is my resistance level, I want my candle over here to close, not just the wick. It should basically close above the level. Now this is a perfect breakout. Alright, if it was something like this is my resistance level and my candle is just has a wick over here, so this is not my ideal situation. Why? Because my candle's wick is above the resistance level, but my candle did not close above it. Here in the first case, my candle closed above the resistance level. So this is my first and the most important tip, my most important confirmation factor or filter, which is my close filter. I want my candle to close above the zone or below the zone, whatever. So that's what I'm emphasizing on, closing the candle over and over again. And this is not just for the purpose of your CMT exam. This is also because it is extremely important in your trading as well. The moment you start analyzing your, just a second, the moment you start analyzing your trades and the moment you involve this close filter in your breakouts, your trading success will improve like on a great extent, and I can promise you that. Alright, so that is what is known as my close filter. Let's quickly see examples of the same, and let us just see. So this is not the only basis or the only filter. We are going to see more and more filters, all right, to improve the accuracy of our trades. So if you look at this, let me look for a good, okay, so this area, no, it's a lot of consolidation. All right, let's just take this area only. No, one sec, I just want you guys to understand it, so I'm looking for a clearer one. Okay, if you look at this chart over here, this is my daily chart of Reliance, by the way. Let's just do this. All right, if you look at this, just ignore the last candle. What can you see? Okay, you can see that my price is resisting this line over and over again. It's not going past this line at all. And why have I marked my line over here and not over here? That's because whenever I personally draw support or resistance zones, I always involve the wicks in it. You can't just draw a line something like this and be like, this is my support, this is my resistance, because here, can you see clearly there's a wick over there, right? So you cannot be drawing zones like that. This is something which changed my trading journey, so I'm sharing it with you. Whenever you are drawing a resistance level, always include the wicks in it. All right, so something like, I use a rectangle to draw my zones. So look at this. So I can see that my candles respected this zone and it did not break out of it. So here, now if I look at this, how do you think this is a breakout candle? Think about it for a second. Do you think that this candle is a breakout candle, this one? It's not. Why? Because it did not give a closing above the zone. It didn't give a closing above the zone. Its wick is in the middle of the zone. It didn't give closing above the zone, so I'm not going to include it. Alright? Now look at this candle. Just a sec. Look at this candle. This one. What do you think about it? Is it a perfect candle for me? Does this pass my close filter? Yes. Why? Because the candle closed over here. The candle closed over here. So the closing is finally outside the zone. Until now, my closing of the candles were below the zone. Now suddenly my candle closed above this zone. So this shows me that the close filter has been satisfied. Alright. So that is my first filter, where I'm going to check if my candle is going to close above the zone. The same thing you are going to use in your other, like if there's a breakdown, you're going to expect a red color candle to close below the zone. So this is how is my first filter. So the first thing after a breakout or a breakdown you are going to see is that your, just a second, yeah, is that your candle is closing outside of the zone. So that is the first and the most important thing to check. So I hope you're clear with the close filter. Alright, so now this is my second filter, which is point of percentage filter. What do you understand by point of percentage filter? So usually what happens, if my stock broke out of this and it just broke out this much, it can be a false breakout and my stock can just come into the zone again, because this is a very less percentage of a breakout. This does not really signify something, right? It's not a proper breakout. That's what they're trying to say. So when you need a proper breakout, what you're going to do is that you are going to use the point of percentage filter. So you need the stock to break out a considerable amount in order to be sure that this is a proper breakout. So for this purpose only, they have written that you need to use point of percentage filter. So you need like usually people use 1 to 3% filter. So when the breakout is more than 1 to 3%, you can say that the breakout is real. So anyway, nothing in technical analysis is 100% true. So you can just say that this also again improves the accuracy of your trades. So let's quickly read what they have written about our point of percentage filter. Okay, so another confirmation method is to establish a breakout zone either a certain number or fraction of points or a percentage beyond the break. So filter and the close are required. So the closing filter was my first filter, which I have discussed in the previous slide, and the second thing is my point of percentage filter. So I want my breakout to be at least 1 to 3% more, then only I can confirm that my breakout is real. So how am I going to do that? Let's go on the chart and I'll show you. Let's take the same example again, if that slide is still there. Now I don't remember where that is. Okay, whatever. Let's just take another example in Reliance itself. Oh, it's over here. Alright, so let me just draw my zone again. Something like this, right? Alright, so if you look at the zone, my close filter is sorted. My close filter, my first filter was my close filter. So that is basically sorted. The close filter is basically sorted. Now I'm going to see percentage of breakout. So how am I going to find my percentage of breakout? I can just measure it, right? I can measure my breakout. So you can see that my breakout over here is 2.93%. Can you see written over here? 2.81%. So how did I basically measure my percentage? From the breakout level, I'm going to measure that how much percentage breakout has happened. So I'm not using the entire range of the candle. I'm just measuring outside of the zone to the high. So that is something which suits me. Now it's subjective in nature. So that is how I'm going to measure my percentage. So that's what they've written, that whenever the point of percentage is more than, is between 1 to 3%, so at least it should be 1 to 3% breakout, then it is known as ideal. So that is my second filter. And in the breakout which we saw earlier, the Reliance one, in the example, we can see that two of the criteria are filled. The close filter is filled, right? And the percentage filter is also done. Now let's move on to the next filter. So the next filter is the time filter. Now what do you understand by time? So there's this very nice quote which was said by, I'm not sure who said that, but time can be the biggest enemy of an investor, right? Why can that be a biggest enemy? Because sometimes you really don't know what kind of news can come into the market, right? You don't know what might just happen in some time. A stock can just go down suddenly because of some bad news. So time is very, very essential, right? So we'll come to that when we're discussing time stops. For now, let's just see what the time filter is. So time filter. So rather than looking simply at price, this method looks at the time since the penetration. So the basis is that if the penetration remains outside the breakout zone for a certain time, it must be real. The usual time period is 2 bars. Alright. So what are they talking about is that the penetration. When I talk about penetration, I'm talking about either breakout or the breakdown. So it should remain for a certain amount of time. So for example, if I have my, let's say, if this is my stock and it breaks out, the first candle is outside the zone, suddenly the second candle is inside the zone again, so my stock is going to go down again. Do you get my point? Only one candle is outside the breakout zone, so I need to confirm my breakout. So I need at least 2 candles to be outside of my zone. So I need the price to spend considerable amount of time outside the zone so I can confirm. Alright, so that is something which they are discussing in the time filter. But however, sometimes what happens is that this can also make you miss the biggest moves, because sometimes a stock captures more than like 100 points within one candle itself after the breakout. But if you need to improve the accuracy of your trades, this is one thing you need to keep in mind, is the time filter, that you need to see if the stock is spending time outside the breakout zone. So usually people take 2 bars or 2 candles. When I say bars, I mean the bar chart. So I personally use the candlestick charts, but if the bar charts look better for you, then you can just go and change your candles into bars and you can use this. But for me, I prefer candles. Okay, so that is my time filter, waiting for the at least 2 candles to close outside of the breakout. So that is something which we need to keep in mind. So that's with my time filter. And if we go back to our example, our case study, which was my Reliance. Okay, I'm losing that slide over and over again. I don't know where it was. I think it was over here. No. Anyway, that was a pretty interesting scenario. Which, okay, I think it's over here, right? Yeah, no, it wasn't this. Let's just quickly try to find it. If we don't find it in another 2 minutes, then we'll just go and we'll take another example. Okay. It's okay, let me just do this. There's another zone over here. Alright, so if you look at the zone, look at this. The price resisted the zone over and over again, and suddenly a candle closed outside of the zone. The candle closed outside of a zone. So that was one confirmation that this stock has closed. The close filter has been met. And when you think about the percentage is like 3-4%. So that is my percentage filter. So my percentage filter has also been met. Alright. So that is the second confirmation. Now we want to look at my time confirmation. Is the stock spending considerable amount of time outside of the breakout? So look at this. The first bar is outside. The second bar is also outside. So that also gave me a confirmation that my stock is outside, and it confirmed my breakout, right? So 3 of my filters have been met. So now if I would have entered over here, then the stock would have gone from 290, the stock would have gone from 190 to, let's say, 270. Let's not go into that because we have more filters left. So I hope you understood that. So this is near June. Alright, so that's my time filter. Okay, so that's with my time filter. Now we come to volume filter. So volume filter, I cannot emphasize on how important volume really is in order to confirm your trades. You really need to have a good volume to confirm your breakout. Ever since I got to know about volume, my trading accuracy and success has literally multiplied to I don't know how many times. So it's that important. So volume. First, let's understand in simple terms what really volume is. So volume is, you can just assume it to be the number of shares which have been traded over here. Alright, buy and sell, whatever. So when you see high volume spikes, you get to know that people are really interested. Big players or institutional investors are interested in the stock. For example, I'll just show you an example of a trade which I took yesterday in the Indian markets. So this was something I took in Ultratech SEM. So this is Ultratech Cement, and this was a great trade which I took. Now I have to emphasize on how important volume is, and this is not something which is just going to be tested in your exam, but this is something which you need to be using in your so this is something which you need to use in your trading as well. Alright, so I'll show you something. Okay, look at this. This is where I took my trade, and on my 15-minute chart I could see a technical analysis formation over here, where in this channel or a wedge, whatever you call it, my price was consolidating between this range over and over again in a 15-minute chart. And then I saw my 5-minute chart for further confirmation. My price was just consolidating in this range. Look at this. My price was just consolidating in this range, and suddenly it broke out over here. So this is where I knew that I want to take a trade. Now look at it. Look at what happened after that. I also confirmed this with high volumes. Look at this. Big green. Look at this. Big green. Big green. Big green. Big green. So these things showed me. The volume showed me that some big player is interested to push the prices high. So the volume confirmed that somebody is there with a high capital. Someone is interested to take the price further up. So this is something which confirmed my trade, right? So this is when I took my trade. So at the breakout level, I could see that green, I could see big green volumes over here. That showed me that the breakout is real. If the breakout had low volumes, that would mean that the breakout is false and the price would have just come down suddenly. but then I was sure of this. Why was I sure of it? Again, the time spent, the money, the price spent a lot of time between this range, and suddenly it broke out, and I could see that big players were accumulating their shares over here. That's why the volumes were big. So if a person like you and me put money in the market, buy or sell shares, it will not be seen in the volume because we are not trading with that much of capital that it will impact it, right? So when there are big green candles or big red candles, you need to know that some big hedge fund or someone like that is interested in this stock. So my volume filter, look at this, at the breakout my volumes were extremely high, right? So this showed me. Why do I say that the volumes are high? So this is something visual in nature. I'm not looking at the number. I'm just comparing it with the previous bars. The previous bars were dried up, but when the price had pumped up, then the volumes were suddenly high. So that is how you see volumes. So look at this. Let us just apply the breakout filters which we had discussed in this trade which I took yesterday. Now look at this. First thing is this candle closed above my breakout level. So that is my close filter which is satisfied. Now let's see my percentage filter. Now if you look at this from the breakout level, 0.62%. Well, okay. Okay, again to keep in mind, I did not take a trade on my 5-minute chart. In my 5-minute chart, I just went to see my, what do you say, I just came to see how my stock was performing, but I took my trade in my 15-minute chart. So let's just go there. Alright, so in my 15-minute chart, my candle again closed above my breakout level. So this is where I took, okay, so 1%, 1.10%. So this, my percentage filter has also been marked, right? So my percentage filter, my volume filter, as well as my close filter, 3 of the things have matched my criteria. So this is somewhere where I entered and I booked my profit somewhere over here. So that was about 10% of profit. So that is how you are going to use this. So did you see how accurate your breakouts trading becomes when you include volume in your basis of selecting? Alright, moving on to volatility filter. Now when we talk about volatility filter, what do you think by volatile? Volatile in nature. So if you need to trade in a stock, I'm not talking about investing right now, I'm talking about day trading or swing trading. You need the movements in price, right? If there are no price movements, then you will not be able to trade in it, right? You need it to be volatile in nature. There should be price fluctuation, there should be price movements. If there is no price movement, then you will not be able to capture your moves. You need big moves, you need those proper volatile moves in order to make money. So you need a stock, you need a breakout stock to also match with my volatility filter in order for the trade to be successful. Now you must have heard of the word beta over and over again being used in the market. So if you've read the any books related to the stock market or any of these anything, then you will understand that the word beta has been used over and over again. So what do you understand by beta? Beta, it's a Greek word again. So beta is basically the calculation of volatility of a security related to the market proxy, usually the S&P 500. So I've written S&P 500 over here because the CMT level 1 book is written in the perspective of the US markets. If you're talking about the Indian markets and you want to understand the word beta, I'll tell you. So when you want to understand the beta of a stock, it is always compared to the index. And how volatile your index is, it's going to be compared with the stock. And then you are going to understand what is the beta of the stock. It basically measures the price movements or the volatility of the stock. So in what comparison does it measure? It compares it with the Nifty 50 index, if you're talking about the India. So that is what they're trying to say. So that is the first thing, beta. So if I want to know the beta of any particular stock, let's say anything, how am I going to find? So if you want high beta stocks, you can just go on the net and type high beta stocks and you'll get them. So however you want them, you can just go and type it. Before that, let me just quickly discuss what exactly is beta. So we know what beta is right now, I've just discussed that, right? So beta, there are three means of calculating volatility. The first one is beta, which I've discussed. The second one is the standard deviation of returns. The standard deviation of returns is based on the percentage change in price. It is the basis for most option and other derivative models. Alright, so the breakout filter must use the volatility about the trend and not include the trend itself. Otherwise, a strongly trending stock with little volatility about its trend would have a higher filter. So how am I going to use the volatility? So these two are kind of difficult, beta and standard deviation. However, if you want to know the beta of a stock, you can just go on the net and type it, you'll get to know. Let's see the most important way to filter out a stock in the basis of volatility, that is the ATR. So ATR is my average true range, right? It is an indicator. So average true range is a derivation of the average range. So what do I understand by range? By range I mean the high minus low. How much does a stock move in a day, right? So which is just the average of the difference between each bar high and low over some past period. The ATR is calculated using a special formula, and again it was devised by Wilder. So all of these important formulas are more or less determined by Wilder itself, so keep that in mind. And Wilder himself to reduce the effects of older data. The ATR is an average of the true range of each bar. It includes whatever effect a price gap between bars might have on the security's volatility. So the true range is the greatest of the difference between the current bar high and the current bar low, high minus low. The absolute value of the difference between the prior bar close and the current high, and the prior bar close and the current low. So these are the three ways using which they are calculating the ATR. Alright. So you can use the ATR for a breakout confirmation, and right now we'll be seeing an example of the same, so everything will be clear. Before that, obviously you need to know the theory of my ATR. Just a second. Yeah. So the ATR is the average of the true range over some time period. Being dependent solely on the price of the security, the ATR is not influenced by any other average. So price is the only basis using which the ATR works, right? So that is what they are trying to say. Just a second. It includes the recent trend only so far as the trend has had an effect on the range of prices. ATR is an excellent measure of volatility and is used in many indicators as well as breakout and stop loss formulas. Alright. So as a price filter for confirmation of a breakout, by including multiple of the ATR, a breakout level is adjusted to the volatility of the security. As you can see, the ATR filter expands and contracts. So as in when my price volatility changes, my ATR is going to basically expand and contract. We will be seeing that right now. So how are we going to filter out our stock? So let's read that. If price volatility increases, daily true range will expand and the ATR will be larger, making it less likely to have a false breakout. So if you want an ATR to have a, let's say, if you want your breakout to be more sure, and if you want your breakout of your stock to be confirmed, then the ATR must be high. Whenever your ATR is high, that would confirm that the volatility of your price is high. Alright. So that's with my ATR. Before we start with pivot, let me just quickly discuss ATR and let's see the examples of how to use ATR. So let's say we are using ITC stock. So keep note that I am using the ITC limited stock. Let's go on a daily chart. So this is my ITC limited stock and I'll be using ATR here and show you how to use ATR. So average true range, this is how you can get your ATR. Let's give it a moment to load. Alright, so this is how my ATR is going to look. If you want it big, you can. If you want it small, you can just make it small. Alright, so if you look at the ATR, wherever my ATR is also moving, my price is also moving. Here my ATR isn't moving at all, so my price was also in the same row. So the moment my ATR makes a big shift over here from 5.2 to 6, I can see that my price is moving. So ATR basically shows me the volatility in the price of my stock. So if I want to trade a breakout, I need to see my ATR as well. Let's just take the example of ITC itself. So let me mark my resistance level somewhere around here. Again, if you are wondering why I have marked this level, I will discuss. So my price was resisting this zone, went up, resisted, came down, went up, resisted, came down, and it was just resisting in this zone, right? It did not go up. So here I didn't get the close, but in this candle 31st Jan 2023, you can see that my stock gave me a breakout and a closing. How am I going to confirm it with ATR? Look at ATR over here. Let me just, okay. So until this candle, my ATR was here, right, around 5. And the moment my candle closed outside of my zone, if you look at it, my ATR went to 6 from 5. That showed me that my ATR is moving too. So my price volatility is increasing. That gave me a confirmation. And if you look at the volumes over here, my volumes look pretty high too. So ATR also moved. So ATR gave me a confirmation. So the ATR needs to be high in order for me to trade a stock. So that's how you're going to relate my breakouts or breakdowns with ATR. If my ATR is moving, then I can say that my when I say that my ATR is also moving along with my price, I can confirm. Alright. So one more thing, the ATR is going to break out along with my price. So you can look at it that way. So if you look at the ATR over here, my ATR was resisting this zone. The moment my ATR broke out from here, and my price also broke out. So in case, if let's say this was my, if I was trading this, where's my trend line? Okay, so let me say that this breakout I wanted to trade, alright, and if you can see over here, my price broke out, but will I trade it? Look at the ATR. ATR is just the same. So in that situation, you are not going to trade. I hope you are getting my point. Let's see more examples so you'll understand it better. Alright. Okay, so if you look at this zone, alright, so if you look at the zone over here, the price was resisting the support, not resistance. It was not breaking down below the support over and over again. Now this here, if you can see my ATR, right, my ATR was also not going further up. The moment this broke down, my ATR also went up. So this showed me that the price is going to go down. So as soon as my ATR also breaks its support or resistance, then that's how I'm going to use my ATR. So I hope you understood this. So average true range should be below the breakout. So average true range below the breakout. And the moment my breakout happens, my average true range also behaves in the same way. So if I want, I can make it big however I want to see, but yeah, so something like this. So I hope you understood how to use ATR. We'll be seeing more examples, don't worry about that. Moving on, we come to my favorite technique, which is my pivot point technique. So you must have heard about pivot points multiple times, right? So pivot point technique is a method of determining the likely support and the likely resistance levels, right? So if you go on your chart and if you try to, let me just remove my ATR. If I try to plot my pivot points standard, okay? So look at this. It plots your likely support and resistance levels. Let's go and see, alright? So if you look at this, it's going to automatically plot some likely resistance and support levels. So R's are my resistance, S are my support. And if you look at this, the price actually took support over here and went up, took support over here, went up, took support over here and went up. So you see how it's respecting the pivot points. Again, I will repeat it over and over again that nothing in technical analysis is going to be 100%. So you cannot just blindly believe one indicator and stick to it. You need to use a combination of indicators, and nobody can tell you what is the best combination of indicators. You need to see what works for you, right? Even though we are discussing all sorts of indicators and we will be seeing examples and try to make a strategy, but everything is going to be on your own discretion. You need to do your own back testing. Okay, so the pivot points, that this technique uses the previous period's high, previous period's low, and previous periods close to establish support and resistance levels. All right, so for this current period, if I want to identify my support and resistance, it's going to mark off my previous candles high, low, and close. So that's how it's going to come up to it. All right, but it is using that and then creating pivot points. So let's see how it does that. So the pivot point formula is given in your book. However, I don't think it's important for you to learn the formulas because it is all going to be done by the software itself. Like, we didn't have to calculate this, right? It gave it by itself. But however, just for your knowledge, pivot point is given by previous period high plus low plus close divided by 3. All right, and then your first resistance is given by 2 times the price minus the previous period low, and the first support is given by 2 times the price minus the period high, and the resistance, the second resistance, is given by price plus previous period high minus low, and second support is given by price minus previous period high and low. So I don't think it's essential for you to learn the formulas of how to calculate the pivot points. You just need to know how to use your pivot points. So pivot point is one more filter which you are going to use for your breakout or breakdown. So how am I going to use that? Whenever you are confirming your breakout, also confirm it with pivot points. So I'll just remove it and we'll see a good example for you to understand. Let me go on some stock. Let me go on Apple. Alright, so this is my Apple stock. If you can look at it, well, it has a lot of gaps, so I'm not preferring to trade in this right now. Let me show you something. Okay, if you look at, no, the volumes aren't confirming. I want to show you a perfect example. Let's go to gold. This is my gold chart. Okay, this looks perfect. This is my gold chart. Now if I want to trade in this, how am I going to use my pivot points to confirm my breakout level? Let's see that. Where's my volume? Whenever you're going on a spot chart, if it's not the futures chart, you won't be able to see the volumes. So I'll just go on gold futures. This is my gold futures. Let me find a zone for you which will show a perfect breakout. Looking at this looks great. Okay, if you are going to trade somewhere over here and you're marking my support, my resistance zones, I'll mark it something like this. Why have I marked this? My price was resisting this zone over and over again for so many days. You see, 8th July to 20 July, my price was just at the zone. It wasn't breaking out of the zone. Okay, and at this candle on 21st July, my candle finally broke out of the zone. Okay, so what was my first filter? The close filter. The candle gave me closing which was way above my zone, first filter. Secondly, my percentage filter. Let's measure the breakout. So from here my breakout happened. Alright, the breakout is 0.53. I need 1 to 3%, but right now let me again measure it and check if it matches my percentage. Yeah, it's about 1.30. So yeah, it matches my, so my close filter is also matched, and my percentage filter is also matched. Now what do I have to check? Volumes. Look at the volumes over here, right below. If you can see, there is a volume spike over here, the volume spike, as compared to these levels. Here my volume was stagnant, but suddenly here there was a big pump in the volume. So that is something which confirmed my trade. So three things have been matched. So when you confirm your trades, when you confirm it with various indicators, that is something which will give you some edge over other people because you are confirming. Also, that doesn't mean that you use hundreds of indicators and confirm it. Use a particular set of indicators. That's how you are going to learn. What did I do? Okay. Alright. So what all have we discussed till now? So we discussed the close filter, we discussed the percent filter. Now we also discussed the volume filter. Now let's discuss the time filter. My 2 bar spent time outside of my breakout range. So that's another confirmation. My time filter has also been confirmed. Now we come to volatility. So let me put my ATR, which is my average true range. Okay. So if you look at my ATR over here, did it confirm? Okay. My ATR suddenly went up. It is not sideways. It has went up. So that also confirmed. So my ATR also confirmed. What else is left? My ATR confirmed. My volatility is also confirmed. Now I'm going to use my pivot points. I know these videos are becoming really long, but that is only because I want you to understand, and not just for the exam but to use it in your actual trading. Why aren't my pivot points coming? Let me just, okay. I'm not able to put the pivot points. I don't know why. Maybe I have to remove my, let me just remove my volumes. No, my pivot points isn't working in gold. I don't know why. Let's just try it for the last time, otherwise we'll go to some other stock. Nah. Okay, I'll just take another stock then. Anyway, before we see the pivot point, just look at this breakout, how it worked. So here if I would have entered after my confirmation, I would have booked a good profit, like a great profit. Like this is just, let me take this example, Reliance. So my price was resisting this zone over and over again. The price was not able to go past this zone. Suddenly it gave a breakout over here and then it pumped up. So let me use the pivot example over here. Look at this. This was my breakout zone, and if you can see, there was a resistance level over here and a pivot level over here which was broken. So this shows me that there are hundreds of confirmation now. My volume filter, my time filter, my close filter, my volatility filter, and my pivot filter. It broke my pivot level. That showed me another confirmation. So from here, look at what happened to the price. The price pumped up. So that is how you are going to use your pivot points whenever you are trading your breakouts or breakdowns. If you want to see the same thing in gold, let's see. This is my gold chart, and this is my major support. I can see that this is clearly a major support. So if I mark a support zone over here, okay. So now if you look at this, let me see all my filters now. let me just see pivot first and then I'll show you what I meant. So if you look at this level over here, my price was resisting this zone over and over again. Here, if you see, the price was resisting this rectangle over and over again, but suddenly here it broke and it gave me a further confirmation. Why? Because my pivot line was also broken, so that confirmed my trend. So after this breakdown happened, I can see that my price went really low. So when my breakout is happening, if my pivot point also gets broken, that is an additional confirmation. That is how you're going to use a pivot point technique. Now we come to stops. So stops is the most important concept you are going to learn ever in your entire trading journey. Without using stops, you will not be able to succeed at all. You need to set stop losses, you need to set stops. When I talk about stops, we are talking about stop losses only. You need stop losses. You need to set stop loss every time you take a trade. Every time you buy something, you need to set a stop loss. Stop loss basically minimizes your risk and it protects your capital. Alright. So the first thing is a limit order. Now what do I mean by limit order? Or a buy stop, entry stop. So when I say entry stop, I'm basically talking about a limit order. In the CMT book, the limit orders are described as entry stops. So if I want to enter into the market in the price of 140 rupees, then I'm going to set an entry stop of 140. The moment the market price reaches to 140, my stock gets bought. Not more and not less. This is the exact amount at which I want to enter. The same thing with exit stops. So when I talk about exit stops, that is my target. The moment my price reaches 200, I need to exit out of the market. So that is my exit stop. I hope that is clear. And when I'm talking about protective stops, I'm talking about my stop loss. That is going to be based on my price action, where I'm going to set my stop loss. And trailing stop. What do you understand by trailing stops? So the moment, let's say the price at which I bought a good was 140 rupees. So my target is 160 rupees, okay, and my price has already reached 155. My initial stop loss was at 100, which meant the moment the price falls to 100, I get exited out of the market. Now the price is at 145. In that case, I can shift my stop loss from 100 to 140 so that my initial loss has become zero. So I hope you understood that. That is what is known as a trailing stop loss. Trailing stop loss is when, as your profit increases, you are trailing your stops upwards. So I hope you're clear with that. Now let's talk about what a whipsaw is. So you must have had situations in the market where you have bought a particular good and the price went down. You got scared, you sold your stock, and the moment you sold your stock, the price started rallying again, and again the price rose very high. And then you're like, why did I exit? So this situation is known as a whipsaw. So a whipsaw can be avoided by setting proper stop loss based on your price action. Okay. So all the stops must be placed based on price action of the security and the level at which a reversal trend is likely. So if you're trading a flag pattern, it's just an example. So you know that your price went up over here. So you need to set a stop loss over here because you know that the moment the price falls back, then the price might go further down. So trailing stops are progressive stops. So as in when your profit is increasing, you are trailing your stop loss and reducing your risk, and progressive in nature. So that is what is my progressive stops. So there are various methods of using trailing stop loss. So now let's see what are the methods of using a trailing stop loss. So the first thing is a trend line, stop line, parallel. Alright, so if you're trading a breakout in a trend line, let us just assume that you are trading a trend line breakout. So that is, let me take an example of a trend line breakout. Okay, look at this. This looks good to me. So this is a trend line breakout. So you can see the price resisted this trend line over and over again. Here what happened is the price pumped up. So if you would have entered somewhere over here, then you would have captured this moment. right? You would have easily captured this movement. So how do I set a stop loss over here? If my price falls back into this trend line, then I can say that my trade has become invalidated. So am I going to set a stop loss over here? If I set a stop loss right on the trend line, sometimes what happens is that the price touches the trend line and goes back again. A whipsaw happens. So you are going to draw a trend line which is parallel to your initial trend line, something like this. And you are going to set a stop loss over here instead of the real trend line. What will happen when you do this? When you do this, you are not going to be affected by the false pullbacks. So when the stock tries to, that is something which we'll be seeing, pullbacks, throwbacks, everything, but we are basically making a trend line which is parallel to my initial trend line, and so that we get protected from our loss, but also it will not be a fake exit or a false exit. So that is how you're going to trade a trend line, and that's how you're going to set a stop loss, which is using a trend line. That is my first method. Hope you got that. And how are you going to trail it? Again, so as in when my price moved further up, my trailing stop loss will come somewhere over here. So as my price moves up, you are also trailing your stop loss using your trend line. Now we come to what a chandelier exit is. Now what do you understand by a chandelier? A chandelier is something which you fix on the roof. So how are we going to use a dart in this? So let me just discuss that quickly. Okay. Another method of trailing stop designed to account for the intrinsic volatility of the security is to measure some fraction of the security's ATR from the latest reversal point. This method is called a chandelier exit. So what does that mean? Assume that you are long a security rising on an accelerated trend line reaches a high of $50. The 14-day ATR is 2.5. Based on an evaluation of the market strength, you decide to place a stop loss 3 times ATR below the recent high. So ATR basically gives you the average range. So we'll be discussing everything in detail, but try to understand what I'm trying to say. That you know that the stock can move 2 rupees in one day. So if I'm setting a stop loss, I will set a stop loss which is 3 times the average range. So if I know that a stock is going to move only 2 rupees in a day, and if I set a stop loss of 2 multiplied by 3, so let's say 6, then I know that if such a big move happened, then probably the trend reversed and I need to exit. So that is my second thing. So chandelier exit basically considers volatility, and it is going to be based on ATR. Now let's go to what my parabolic SAR is. So parabolic SAR is also used by people, even though I don't personally use it, but I'll just show you what it is. So this is my parabolic SAR. So when if you're trading a breakout, let me just take that again. So the moment it goes up, you are going to set a stop loss at the parabolic SAR level. So as my price moves further up, I'm going to set a stop loss over here. So these points, if you can see, these points are good for you to trail your stop loss. The moment my price, let's say the moment my price reaches this level, I can set my trailing stop loss at this point. So the points are given by my parabolic SAR to trail my stop loss. Okay, so that's how I'm going to use my parabolic SAR. Go to the TradingView website and practice how to use these, and then only you will be able to understand it better. So the last thing is my percentage gain. So again, percentage gain is like if you have a 50% profit, then you are preserving your 30%. So you are placing a stop loss, or you're placing a, what is it called, protective stop at 30% profit. So something like that. So that is something which we will be using, percentage gain. So I hope you understood that as well. So these are the methods. Okay, and now let's talk about time stops. So time is the biggest enemy of an investor, I told you. So you never know, tomorrow there might be a news coming which would just suddenly drop the share price, right? So stuff like that can happen. So in that situation, they are saying that time stops. If I'm taking a trade and I know that within 3 to 4 days it will go and hit my target, but after 3 and 4 days if the price is still here only, I know that it did not happen. So in that situation I will just exit from the trade because time is important. I predicted that in this given amount of time my target will be met, and if that did not happen then I will just exit. Now the second thing is a money stop, which I personally don't think you should do that. You need to position size and choose a particular position sizing which is good for your risk, but money stop is not good. The stop loss should always be based on your price action level. It shouldn't be based on the fact that today I'm investing 100 rupees, the moment the loss becomes 20 I will just exit. That is not a logical and a good way. You need to have a proper price action where you are setting your stop loss. So money stop is that what I just gave you an example of, that if I lose 2% of my capital then I will exit from my trade. That is not a good way, because there should be some logic behind. If you think that it is a lot, then trade with lesser amount of money, but you need to set your stop loss always according to your price action. This is my gap now. So there are various gap ups and gap downs which happen in your stocks. So whenever a gap up happen, you need to set your stop loss right before the gap. For example, if I go to my Reliance daily chart. No, let me just go my 15-minute chart. So look at this. Here I can see that a big gap happened. So if I know that a gap has occurred over here, somewhere over here, I know that a gap happened. So I will place my stop loss somewhere over here, 2245. So that will show that the moment the price falls back down, then my trade gets invalidated. So placing your stop loss right below the gap. So if I place my stop loss over here, it makes no sense, right? You need to place it near the gap only. Specialist or false breakout. Alright, so I'm just stopping this video over here because it is too much content. In the next video we will be doing specialist or false breakout. We'll be also studying retracement, pullback and throwback, and I'll be showing you a lot of examples practically. I hope you understood this chapter so far, and you can check the description box below for the other playlists and for the other chapters. Thank you.